In today's video, we're taking a look at everything to do with the stock markets, crypto markets, and commodities markets right now around the world, including some major breakouts that we've just seen happen in the last 24 hours, and of course, the indecision that we have now on the stock markets after the large move. A lot to go through today, guys, and some key levels that you need to be looking out for. See you soon. All right, everybody, and welcome back to our market recap for the markets closed 12th of January 2022. And when we take a look at a heat map here, the standout is Tesla. We will have that up on the charts a little bit later because it hit a key resistance and it had a very nice move, which we suspected as a community could occur in the previous video. Let's now take a look also at the indices trading action for the day, and most markets started up. The Nasdaq almost up as much as 1% during the day and then fell off to flat. This shows us that the market has hit a key level of resistance, and we have effectively long leg dojis and indecision candles appearing at the close of the day. This is not necessarily a bad thing. It means we've hit a critical point, and now we can find out what the market wants to do for the next session by using some simple techniques that we'll be talking about in today's video. Let's move over to the major sectors. You'll notice here XLB Materials continues to be the standout. We've also got Semiconductors coming up behind. And while IBB, the biotech, and Jets are behind at this stage, they're still holding very critical support zones, and Jets are still holding that breakout level. So we'll have to find out whether it can perform over the next couple of months. Speaking of the next couple of months, for anyone that hasn't been viewing our videos recently, welcome back, or of course subscribe if you do enjoy what we do here. And you'll be aware by now that we've got 3 months of what we would call increased volatility in the markets. This is really where we get traders in the markets. The first 3 months of the year, that January, February, March, where we tend to see weakness sometimes, and also weakness in the tech stocks, with February being the worst month of the year on record usually for tech stocks, is highly volatile, and it means that we've got a lot of opportunity. We also get a lot of opportunity through that August, September, October period, which is the other highly volatile period over the last 20 years. But speaking of volatility and everything else, let's get into the technical analysis, and we'll start here with something we've been discussing, and that is the US 2-year yield. So that's up as high now as 0.925%. Of course, we should be looking at this daily, because if this starts spiking well over 1%, it means even more rate hikes are expected by the market, and that can initially shock things like the Nasdaq and of course S&P 500 and growth stocks in general. So we will be watching the 2-year as much as we can, especially through the first 3 months of 2022. Let's move over to gold. And gold is so close. Can you feel it? It's almost at that 1830. And I know a lot of you guys don't like gold, and relatively, well, you can see why. I mean, when you look at it on a chart like this, it's all over the place, up, down, and all around. But 1830 is a key critical resistance. We have that 1870 as the next big zone. And we'll notice that there was this huge rejection over the break from this area. So if we manage to close above 1830, the participation could be there from a technical standpoint, and that will push things like silver and other precious metals as well. And we're looking for that 1870 first target for gold and silver traders. So hopefully it does happen, and let's hope it is in a participation like we expect. We'll move over to US oil, another phenomenal session here for oil. It's in the middle of nowhere land, so we'd have to think that it goes towards that $85 target now. Whether it pulls back a little bit and moves there, we don't know that, but we are in participation towards 85. There's no real key resistance around here, so even any sell-off should be met by buyer demand. But at this stage, we're starting to move away from the 20 moving average on the daily. So we must remember that if we hit resistance, especially the 85 zone, we expect selling pressure to come in, some consolidation, and the moving average to come up and meet with it. And then we would expect the breakout. So just remember that traders will look to take profit at these zones and then reassess, should we break through, or should we come back to a key moving average? At this stage, if we go through oil, we'll need to be looking at which time frame and which 20 moving average or 50 or whatever's being held. And I guess at this point, we would say the 4-hour 20 is something that's being bought relatively heavily throughout this rally. Not fantastically, but certainly a key area to be looking at. Let's move over to Tesla, as we said, and Tesla hit that 1106. We pretty much suspected around that 11 1110, 1120 would be the resistance. And you'll notice the high for the day was sitting around 1114 or 1115 almost. So right on that resistance that we expect. Day traders have taken a small amount of profit. And for people looking for the Tesla movement, you're really looking for it to break through this zone, and then next area being the 1200. That's going to be the next big resistance. I suspect, and you'll see in the indices discussion we talk about soon, that we might get a small pullback here. And there are a few reasons. One, a lot of stocks are starting to hit these levels, so are indices. And if this gets reached, what we usually see is we see a little bit of sell-off followed by a recovery. And it's what we call really the lightning bolt. Effectively, most good trends start with a trough, a peak, a higher trough where the swing comes in, and then a higher peak. And that's what we'd like to see occur here also on Tesla. A lot of people are also correctly identifying this as a potential massive inverse head and shoulders, left shoulder, head, right shoulder. All we can really look at here is if we get through 1200, that could be a massive participation phase here for Tesla. And we've seen what participation has done before. Breakout, big boom. Breakout, huge movement. So the great thing for Tesla traders is it looks at this stage that 2022 is not going to be a poor year. The price action, while still trapped, is still very positive, and the sentiment is probably the best I've seen it in quite some time, with the online community very hyped over the recent numbers we've seen. Let's move over to Apple. Apple's still stuck in the trade range. We've got clear resistances up here around the 180, 150. And then we've got clear supports, especially this 50 moving average. So any pullback, should they occur, would be met by buyer demand, you would think here. And any closures below this, if you're a bear in the market, well, you'd be absolutely out to get the salmon at that point, because you would be excited for some shorts. And that's the good thing for bears as well. You're going to be pretty well aware where you are winning in the market. If you're a bear on this market, there are clear areas on not only the indices, but many major stocks. For now, Apple remains in the sideways action. And remember, we've got earnings in 15 days. So often Apple will ramp and it becomes that buy the rumor, sell the fact. And I think that's something we should keep in our back of our minds when we're day trading this stock. It will most likely go into, let's say, earnings optimistically, but it does tend to miss. And that's partly why we get that February sell-off. A lot of tech stocks disappoint in these particular earnings results. Let's move over to ARK. So there's a lot of discussion about 2022 and Cathie Wood's funds and hyper stocks in general doing better. Not yet, guys, not yet. So we have here the supports. We know that the 20 moving average on the daily is a huge point of resistance. And we're starting to think, okay, when will we get this recovery? We can't predict it until we get the first signs or the first stages of the recovery. So we've got increased volume. Cool. That could mean that Wall Street and other large funds are transacting each way in these particular stocks. We've got the 20 moving average, which is holding as a dynamic resistance. And that's going to meet down here, you would think, with the previous support acting as resistance. So what we look for now is really going into the smaller time frames, such as the 2 hour, and thinking about that lightning bolt. Peak, so the trough to the peak, to the higher trough, to the higher peak. If we get something like that, what a fantastic signal. At the same point, if it goes through the 20 moving average, and this is similar to what we're starting to see appear on Barber as well and other stocks, it could be one of those exciting periods for some participation in ARKK, ARKG, and other hyperstock funds in general. And I think a lot of people have got their eyes on many of those. Let's move over to semiconductors. And you'll notice here, semiconductors are stuck in a massive channeling range. Buying off 290 has been quite profitable, and selling around that 316, 315 has been very profitable as well. And as long as semiconductors stay in this range, it becomes quite a tradable area or quite a good zone for us to focus on. And you'll notice this is the beginning of our discussions today about long leg dojis or indecision candles. We've got the high, we've got the low, we've got the open, and we've got the close, guys. Indecision at this point, previous little bit of resistance over here in the middle of nowhere land, almost the middle of the channel. But the good thing for semiconductors traders is you know where your buyers are, you know where your sellers are, and if you breach the top end, guess what? We can take this distance here, and this distance becomes A, and then we extrapolate that out to become B. It becomes our take profit, a standard channeling range. So semiconductors have got a good setup for 2022 as well, if you know what you're doing with it. IWM is kind of similar. Again, nothing really has changed here. A lot of people are talking about this being the inverse head and shoulders. I look at it as more of a channeling range. And there was a joke today on the live streams. And by the way, we are back doing the live stream closes, Monday to Thursday closes, half an hour before the close into half an hour after, where we discuss crypto afterwards. And if you're interested, come and join us because it's a great time. And a lot of people were laughing about IWM and saying it causes a bit of depression, unfortunately, because it's been sideways for so long. And that's what I think you have to expect from this particular index. It's still stuck in a massive range. And while it had that false breakout or the breakout that ramped for a few days, it really has not performed for quite some time. And when we're talking about this particular market, we really think about 226 and 220. So 220 almost got reached, sold off there. Again, the price action still looks relatively strong here in the previous days of trade. And 226 is just what a level for us to be focusing on. Another thing I like about the way that IWM is setting up is the fact that if we take the distance here from the head to the neckline, extrapolate that out, it proofs. And this is what we call market proofing. Basically, it's saying the technical distance, should we break through here, is equal to the previous resistance level. And that means the market is well thought out about where it's stopping, why it's stopping, where it's sitting, and all of those types of things. I like it, and I would love to see it move through all these moving averages, but it will be a very tough trade, and you would be looking for the S&P 500 to actually show the way, and then just grabbing the IWM as it breaks through the key resistances with the S&P 500 already showing the way. Let's move over to the next market, and that is, of course, the Nasdaq. And here we've got the futures trade. Now, if we move to the NDX itself, which we should be using whenever possible, or QQQ, we have a long leg doji. And this is because it's the real market in comparison to the futures. Whenever possible, try to use the real market as it's actually open during the high volume period, whereas the futures can sometimes give us fake technical signals, and we'd rather not use them as much as possible. So you'll notice 16,000 was reached, big psychological level, previous support level becomes resistance. Why? 20, 50 moving averages. The red line and the blue line, the exponential moving averages, are acting as a bit of dynamic resistance. And I'd almost say it's kind of like deja vu. Let's have a look over here on the left-hand side. Trough, recovery, hits the two moving averages, previous support, pulls back, breaches through, rally. Well, imagine if that exact same thing happened over here. Trough, peak, two moving averages, pullback, movement up, new peak, lightning bolt, rally. That's what makes a lot of sense in the markets right now. And it's stopping right at resistance. And when we look at something like the SPY as well, long leg doji, again, indecision exactly where the community thought it would occur. You guys were on this one. Resistance, 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 high, low, open, close. Basically, the market has no clear direction on where it wants to go after this one. But the good thing is day traders will have their levels. They've got the previous session high, they've got the previous session low, and they'll be looking for follow through on the bottom end or follow through on the top end in the next session. And again, could be like this. Bang, bang, pull up. There's our big lightning bolt, and we get that continuous follow through to all-time highs from the bull side. And of course, the bear side would be looking at closure below, further follow through. Trend line will be the only teller there. Weekly 20, that type of thing needs to be breached. And if you're looking just at another bullish session for the next day due to economic news, all we're looking for is a movement above and continuation. And you would think that once it gets past this high, 480 is the next very logical technical zone. But do remember there are options expiring this week, and a lot of them are expiring around that 475. So let's just bring up some options data as we like to do. Of our options discussion, we have here the 460 put wall. We discussed this earlier in the week, and that kind of puts a floor in the market. Usually the market will not want to move under such a big outlying option strike that's been taken with heavy quantity. We do have a call wall though, and this call wall around that 475 zone is quite strong. So this kind of traps the market for this week. We don't expect it to be under 460 from an options perspective. We don't expect it to be above 475, most likely. I mean, it's obviously not a guaranteed thing. There's nothing like that in the markets, but it does give us some clarity, and it kind of also makes sense going back to our SPY chart here, why we're seeing indecision here. It's had a great rally. Now we see a little bit of a pullback, and then hopefully the next week we get that further recovery. But if the bears are going to win, you guys know where it's going to be. Weekly 20 selling off past that zone. At this stage, still looks quite strong. Indecision, some decent day trading coming up. Let's move over to the crypto world, and the crypto world has done the right thing. Ethereum has managed to get through 3250. The resistance was breached. It actually flagged through there and went the full length straight away. It's now pulling back a little bit, but overall this is a good sign. So let's have a look at this on the daily to get a bit of an idea about the floor that's been formed here in Ethereum. And we've got good buy wicks. We have a little bit of volume, not huge. And really what we're looking for now is hopefully Ethereum can get back to that 3600 zone. So while it might pull back, we're looking for the rally to 3600. And it's the same with Bitcoin. Bitcoin's managed to get through a very key area here. We've moved through the 43,000. We're pulling back a little bit now. Let's talk about this. Long leg doji, bullish hammer, decision made. We then saw that bullish rally in the previous session. And when we go down to something like a 2 hour, it still looks pretty damn good. So while there could be pullbacks like there is right now, we hope they are met by rallies, and 46,000 is the next support that you would think becomes resistance. The most logical conclusion that we've got right now on Bitcoin. Of course, it is manipulated. We don't know exactly what the whales are going to do, but based on the current price action, based on the current breakout, you would think 46,000 is the next logical technical area for crypto and Bitcoin in this case, and that should lift all of the crypto markets. Let's move over to the calendar. What have we got left coming in? We've got Thursday's PPI news, 8:30 a.m. New York time, and then we have core retail sales. So these numbers may move the markets a little bit. Overall, they won't move it as much as the Fed and of course Jerome's discussion. So we don't need to be as worried for it. But if you're a scalper or a day trader, you will want to be very well aware of how these numbers look, and we'll need to be watching. As always, thanks so much for watching the video. If you've enjoyed it, please remember to subscribe. It does help us out. We're going to go towards 100K this year, and we'll be putting out as much content as possible. Just a reminder as well, we'll be live for the market closes Monday to Thursday as per usual. So we're back to our normal schedule, and we'd love to see you there. Bye for now, guys. See you in the next one.